Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. President Trump orders his administration to consider imposing reciprocal tariffs on trading partners, giving his team until April to figure out how to do it. Asian equities reacting positively to signs that those trade barriers may be weeks from coming into effect, raising chances for negotiations. Meanwhile, Trump says Indian Prime Minister Narendra Modi has agreed to talk about the U.S. trade deficit, even as he criticizes India for high duties and defends his reciprocal tariffs plan. Plus, job cuts, the rolling back of DEI programs, and the end of hybrid work arrangements. We speak to the managing partner and global chair of executive search firm Stanton Chase about the radical shifts in corporate culture. Well, our top story today, President Trump is ordering his administration to consider reciprocal tariffs on trading partners as he targets a global trade system he complains is tilted against the U.S. Trump also warning that import taxes on cars, semiconductors and pharmaceuticals over and above the reciprocal tariffs will follow. Trump's nominee to lead the Commerce Department, Howard Lutnick, says the country-by-country process is expected to be complete by April.
Reciprocal tariffs, those two words, reciprocal makes tariffs really fair.
All countries, there'd be no exemptions, right? It would be all auto imports?
Any exemptions now, because you don't need to.
Still, there may be a ray of hope for India, with the president announcing talks on the bilateral trade relationship after meeting with Prime Minister Narendra Modi.
Prime Minister Modi and I have agreed that we'll begin negotiations to address the long-running disparities that should have been taken care of over the last 4 years, but they didn't do that, in the U.S.-India trading relationship, with the goal of signing an agreement. And we want, we want a certain level playing field, which we really think we're entitled to, and he does also.
Well, for now, investors appear to be cheering Trump's decision not to implement reciprocal tariffs right away. Avril Hong is watching the market reaction. Avril, stocks mostly rising on this tariff timeline, but you know what? I feel really nervous. If not today, maybe tomorrow. It is coming.
Yeah, I mean, it's keeping investors on their toes, right? But I think for now, there's been this collective sigh of relief that's gone up, that these levies are not going to be imposed imminently, that maybe there's room for negotiation. Maybe Trump wants to extract concessions. After all, this is the approach he took with Canada, Mexico, Colombia. And the other point, this was made by Swati Patni on the MLive blog. I thought it was a really good one. If he's going to be taking this specific individual company or country approach, I should say, that's going to be really difficult to achieve. Maybe the tariff path or plan is unworkable. So we saw that late session surge in the US, and Asia stocks are mostly following suit. He did highlight Japan, single out South Korea as well. The Hang Seng, that outperformance is continuing, led by Chinese tech. And of course, this is defying talk that the peak is in. On US Treasuries, we saw that rally a day ago as well, after the producer prices showed less inflationary signals, quite flat now for the board. I thought I'd also highlight the results of the MLive Pulse survey, which showed us that the majority of respondents seem to think, despite or whatever way the trade war path looks like, the shape it takes, that is going to be bad news for the US Treasuries market. And they actually think that if these trade worries persist, we could see the yield on the 10-year hitting 4.8% in the next 6 months, and this would be on the top end of the range. Flip the board again, because I thought I'd also highlight that traders or investors, majority of them, were hesitant to reach for treasuries as a safe haven, and no prizes for guessing what they actually reached for. Gold hurtling towards $3,000, and it was their top pick. And this is despite the records we're seeing in U.S. stocks, Has.
Yeah, gold and not surprising. We have the dollar as well as the yen. Avril Hong, thank you so much for that. Let's get more on markets with Ashvin Murthy, founder and CIO of macro hedge fund AVM Capital. Good to have you with us. It is too early to pop the champagne.
It is too early, I think. These tariffs have been delayed. I think if you look at the end goal, they're probably going to implement tariffs. I think Trump's cabinet is trying to do this in a measured way. Trump's headlines may not indicate that, but it appears, if you look at what's happened over the last 5 weeks, it looks like they're going to move towards implementing these tariffs in a calculated and measured way, but they are coming.
And the market's nervous. We talk about how, equity markets are pretty resilient. We're seeing them, testing highs after highs. And we're seeing gains recently as well on the back of, perception that perhaps those reciprocal tariffs will come only later. But the thing is, we heard from Avril how people are also scooping up gold, scooping up the dollar and the yen. So there are nerves out there.
Yeah, I think the gold story is interesting. For the past 3 years, ever since the war broke out in Ukraine, I think a lot of the current account surpluses in many of these exporting countries, and many of the countries are not too friendly with the U.S., that's been recycled into gold instead of U.S. treasuries. And that's something that's probably not going to change in the medium term. So if you look at gold, it's usually correlated to the U.S. dollar and real yields. There's no correlation. It's either flat or up. And that's been the trend over the last 3 years.
But the thing is, when it comes to geopolitical risks, they seem to be easing. I mean, Trump is talking about an end to the Ukraine war, yet people are still buying gold.
I think if you look at 2 countries, a lot of the demand's coming from India and China. And China in particular, there's been a lack of investments to make over the last 3 years, right? You can't take your money out to invest overseas. The only thing was the bond market, but yields are quite low. Equity markets are bad, property markets bad. So there's been a lot of demand on the retail side for both sovereign initially and now retail for gold, because that's been trending and doing well.
Now, the other big theme, of course, we've been talking about reciprocal tariffs. Of course, most countries don't really have, levies on U.S. imports, but there are countries, especially in this part of the world, which may be a key focus for the U.S., the likes of India, the likes of Indonesia. I mean, on the back of your head, your thoughts will always be what's coming. Are these the countries that you stay away from? How do you play this market then?
I think there are 2 ways. I mean, there's one way to look at this is, the U.S. understands that India, Vietnam, Indonesia, they're imposing quite a lot of levies and tariffs and duties on U.S. imports. So the way to think about this is maybe the tariffs on U.S. imports are going to go down rather than the U.S. imposing tariffs on Indian exports, right? So I think that's the negotiating tool at the moment. The impact to the U.S. is quite small, because the main trading partners don't have too much of a, Canada, Mexico, Korea, it's free trade agreements. Even with Europe, the average tariff is about 1%. So what we're looking at is India and Vietnam, which account for maybe 7% of total imports. It's not going to be meaningful for the U.S. So what's going to be more meaningful is reducing the duties that India and Vietnam impose on the U.S. imports.
So, Ashwin, have you made tweaks to your investment strategy on the back of greater clarity from Trump's policies? Going into the year, they said, wait till we know what Trump has in mind. And now there's greater clarity what he's doing. Have you tweaked your portfolio as a result of that, your strategy?
I think for us, we came into this year expecting Trump to implement tariffs. One of the things we don't do is trade on Trump headlines. I think what we've seen over the last 5 weeks is whenever Trump says something, maybe there's 30% truth to it. Right. What we pay attention to is what his cabinet is saying, because they're doing the work on the ground, and it looks like they want to implement these tariffs in a measured and calculated way. That won't be a big shock to the economy because it doesn't help anyone. They understand it. They're from the business community. These big shocks, like what Trump announced initially on Mexico and Canada, would just not be sustainable for both the U.S. and their trading partners.
So if you cut out the noise, you're trading on fundamentals. How are fundamentals looking?
Fundamentals are looking good. I think U.S.,
for the U.S. economy.
For the U.S. economy, they're looking good. It started in the middle of last year where we started getting bullish in the U.S. economy. The only thing with the U.S. right now, and they cut 100 basis points when the economy is doing well, so things are really good. The only issue is that we see inflation trending higher this year. That's a mix of core goods inflation increasing. We had a deflationary period over the last 2 years. That has ended. And we're seeing core services inflation, while it's coming down, we expect that to stabilize. So we expect inflation to stay at this level and start drifting higher for the rest of the year. So that complicates the story for the Fed.
So that could be a rate hike instead of a rate cut.
Absolutely. And I think that's an unpriced, mispriced tail risk in the markets right now. Most people think the next move will be a cut. But if, they work on immigration, reducing immigration, and the labor market remains solid, if you see the jobs, the vacancies to unemployed ratio start to go up again, that's going to bring services inflation back up and wage growth back up. And it's something we need to pay attention to because that's one of their mandates.
I guess the big question right now is, do you play the U.S. market the way you did in 2024 or 2023? It was a Mag 7 play. And of course, when we take a look at their earnings, ain't too shabby, but, they've missed those, escalated expectations of the market. Do you still buy the Mag 7? Do you buy alternatives? Do you see a broader rally for the S&P, for the NASDAQ?
I do think this year, if we're to see the S&P start rallying, it needs to be a broader rally. When we look at the valuations of these companies and the earnings growth, while they're strong, they are coming down, right? I think they hit their peaks over the last 2 years. So if you look at the charts of Microsoft and Apple and many of these companies, they've lost momentum over the last 6 months. But a lot of the other guys are doing the heavy lifting right now. So I expect the rally to only occur if the rest of the market can start rallying. The breadth has to improve. You can't rely on these Mag 7. If you look at forward multiples of the S&P 500, of looking at the earnings over the next 4 quarters, it's about 23.5, 24. It's a high level. The only other time we were higher than this was closer to the dot-com era. So, we're going in that direction. There's no room for any mistakes. And, if there's a deceleration of growth in the Mag 7, there could be bigger impacts to the market.
And your targets for the S&P and the NASDAQ for year-end?
We actually think it's going to stay here. Our expectation, based on where we see inflation going, is the Fed is going to remain tight. And, you're going to have tariff uncertainty as well. So I think what we would see is, while the earnings growth may remain at, say, 8 to 10%, you could see the multiple shrink down from 23.5, 24 down to 22.
All right, so taper your expectations. We had a guest who said that, you can expect double-digit growth the way we saw in the last 2 years. Ashvin, hang tight. Ashvin Murthy of AVM Capital is sticking around. Still ahead, we have more to come. We dig deeper into the $90 billion turnaround in Alibaba stock, driven by its AI prospects, including a new China tie-up with Apple. More on the outlook ahead of a key earnings report. Keep it here with us. This is Bloomberg. Well, some headlines to tell you about Apple planning to bring AI features to China iPhones by mid-2025. Of course, we've heard this before, but there's a time frame right now. Alibaba will help Apple modify its AI models for users in China. And also news from Baidu. Baidu will handle iPhone features such as visual intelligence. Of course, this news has been driving the tech sector in China, which is hot, hot, hot. And Alibaba, by the way, has benefited in a huge way, surging about 50%. Taking a look where we are in terms of how those stocks are doing, Alibaba is surging ahead, currently up by more than 4%. And now we have news to further prompt that rally. It has been a stunning turnaround, to say the least, for Chinese tech giant Alibaba. The buzz around the firm's investments in AI has helped add some $87 billion to its market value since a January low, with shares touching levels not seen since 2022. For more on the outlook as investors await earnings next week, let's bring in Bloomberg Intelligence senior analyst Catherine Lim, and of course, which Ashvin still with us right now. Kat, we know this rally started back in December when there was talk about stimulus, but it's just gone gangbusters. It's a very hot stock right now.
Well, tell me about it, Haslinda. Finally, right? After, what a lackluster 2024. And then as we kick off 2025, we've got Trump, we've got tariffs, we've got DeepSeek, and then, yes, now we're talking about Apple and Alibaba tying up, with them. So, that's kind of like shift the focus from, things on e-commerce. We went from China to, overseas e-commerce, AliExpress, and then now we're looking at cloud, which will likely be the focus for next Thursday's results. As the company, as investors, I would say, try to find out more from the company, what they are doing with Apple. I kind of think, they're going to be a little bit hush-hushed about things, knowing how things can play out as they develop on stuff. But, clearly, I think, that's where the bulk of the attention will be.
So Ashvin, let's weigh in on this. Is there really conviction in this rally? Some people are still talking about how this is mainly hype, but the way the stock's moving is like, there must be something there.
I can understand why investors think it's mainly hype. We've seen this happen maybe 4 or 5 times in the last 2.5, 3 years, where Chinese stocks rally very hard, hit a wall, and then come all the way back down. So I can understand the skepticism. But I think to get a sustained rally, one of the things that hurt tech since the start of 2021 was China changing its regulations and going after big monopolistic behavior. Now, if they take a step back there, that could be one of the easy wins for China right now. With the property market and the doldrums, that was a big area of investment, and money can't leave the country, so you can't invest overseas. An easy win to improve investor sentiment is to allow these companies to thrive again. So any hints from regulators that they're allowing this and promoting this will be a big step.
And that's the key issue. Let them thrive again. They were thriving. The government thought, they were thriving too much and put a stop to it. Regulations came into place. It was tightened and, it kept on tightening. Are we sure that the tightening wouldn't come again?
Right, you know what, that is the thing, because, the whole of the last 2-3 years, there were concerns from, the techie investors that I speak to, that because of the constraints that these tech companies now have to face within China, they may not be able to actually catch up with, their overseas counterparts. And that's essentially what has actually been clamping or limiting, all the excitement in the last 2 years about whether China can catch up in terms of technology. Are they going to be stifled as a result of the regulation? So exactly as you've mentioned, it looks like things might just turn around, but hey, technology is all about hype, and at least we're getting there for the start.
It starts with hype.
Exactly.
How do you play the Chinese market then? I mean, why wouldn't you want to dip your toes? Because valuations are still very cheap. If you lose money, maybe it isn't that big.
Yeah, I think the way to play it for us is actually not only tech, but you can look at the HS index in China, where you also get the tailwind from all the SOE buybacks, which continue. If you looked at the Chinese bank last year, they did quite well. So you get a good mix. And, if you go in and you start, once you get more clarity, you can start building up a position. But, it's a liquid options market, and that's how most of us in the macro space are going to be looking at it.
And of course, Kat, it is about earnings. Mm-hmm. Can earnings justify the kind of rally we've seen? And from what I've gathered in some of the research, they say for Alibaba in particular, we are expecting a 7% rally after the numbers.
Right. So, they're going to give us historical numbers. I mean, who cares about fourth quarter of 2024 right now, right? It's all about 2025 and, forward. So, I think the trajectory and, whether it's earnings, etc., I think it's the outlook, the growth momentum that we're seeing. I mean, a couple of the segments that the company's going to touch on. China with the stimulus. I think we're gonna come up from the bottom, and obviously we have the Lunar New Year effect recently. So that's gonna keep the momentum going for a little while. Overseas momentum itself, yes, that's going to be a little bit of the gray area, but let's not forget that the company is also making splashes like in Latin America, in South Korea, etc. So it can't get worse than this, can it? So then, obviously, we have cloud. And that business has actually been kind of like the bright spot over the last 2 quarters. If we look at the numbers, revenue growth accelerating, margins expanding. So this may actually turn a little depending on what they guide. Now, Haslinda, other than earnings, I'm just going to highlight share buybacks, right? Let's not forget that the company has committed to enhancing shareholders' value. So let's see whether this continues to be the case as they invest more in technology and then logistics.
So great. We have share buybacks, we have earnings, which are likely to be pretty strong, but we also have geopolitics, US, China. I mean, yes, it's only 10% tariffs, but hey, more could be coming. And don't forget that chip play right now. I mean, that has become a geopolitical issue, and China will be under a lot of pressure from the US.
Yeah, so I think that is the main tail risk. So I don't think, the US does not want these big tech companies in China to thrive and internationalize. If they look at the domestic market, it's okay. But, there's obviously this race between the two of them. So we'll have to see what the US implements in terms of tariffs, or, if they're going to target certain industries, which would be the tech industry in China, to make sure, they're going to try and do what they have to do to stop the growth of Chinese tech, Chinese chip giants as much as they can.
So which markets will benefit? How do you trade that? How do you play that?
I think for the time being, there is that recovery play just from valuations alone. So I think that's fine. But other than that, I think, if I had to look at Chinese tech versus US tech, as you mentioned, US tech is quite highly valued. So I can see some fast money flowing into China for the time being until we hear any moves by the US to stop this. And, we get further tailwinds in China if they let go a little bit in terms of tech regulation. So I think that's probably still the place to be.
And Kat, it's not just about Alibaba, right? The other AI-linked companies are also benefiting. We've seen, the surge in players like even JD.com. I mean, how does the whole sector look right now?
So again, if we look at technology itself, it's coming in various forms within the country. Everyone's investing into AI, technology, the algorithm, training up, all their large language models itself. And that's going to actually create efficiency. The good news, again, I would say, about China, I sound like a broken record right now. 1.3, 1.4 billion populations, the number of people that's going to try this thing, whether it makes money or not in the near term, it's all about the longer term monetization opportunities out there. So I think, there definitely is the potential for the market to actually catch up.
And speaking of 1 billion people, there's also 1 billion people in India. And given the stresses we're seeing in terms of relations between the US and China, India could be a huge beneficiary in this.
Yes, and I think Trump actually mentioned it yesterday. So the market is positioned in that way, thinking that India is going to benefit from from the tension between the U.S. and China. So you think from a 5-10 year perspective, I think India has a lot to benefit.
All right, lots to digest. Daily occurrences, headlines that we need to think about. Ashvin, Murthy of AVM Capital and our very own Catherine Lim of Bloomberg Intelligence. Let's take a look at how those markets that we've been talking about are performing right now. Of course, it is a risk-on day for Asia on the back of expectations that those reciprocal tariffs will be delayed perhaps to April. The Hang Seng surging further, up by 2%. HS Tech in particular having a stellar run, up by about 3% right now. Of course, we had the likes of Alibaba surging up by 50% and extending its gains further today. The CSI 300 index currently up by 0.6%. Let's take a look at how we're looking at in terms of those Asian currencies. It has been a mighty dollar story. The dollar has been pretty resilient in terms of the Japanese yen. Currently, it is down about 0.1% versus the USD, and the Korean won, though, in the opposite direction, strengthening as we speak. So the Bloomberg Dollar Index currently up by 0.1% up for 3 days in a row. Now, still to come, trade, tariffs and defense ties were on the table as India's Prime Minister met President Trump at the White House. We'll have a professor of diplomacy from Jawaharlal Nehru University joining us later to decode that meeting. Of course, this on the back of all the headlines we've gotten from that meeting between Modi as well as Trump. Plenty more ahead. Keep it here with us. This is Bloomberg.
Today, the Prime Minister and I are announcing a framework to strengthen those ties even further economically, and the U.S.-India Compact for the 21st century is a historic initiative that will deepen every aspect of our partnership and our friendship. Starting this year, we'll be increasing military sales to India by many billions of dollars. We're also paving the way to ultimately provide India with the F-35 stealth fighters.
We have also set ourselves the target of more than doubling our bilateral trade to attain $500 billion by 2030. Our teams will work on concluding very soon a mutually beneficial trade agreement.
President Trump and Prime Minister Modi speaking at the White House after that meeting just a few hours ago. Now let's go to New Delhi and bring in Bloomberg senior reporter Dan Struff. Dan, what do we make of that presser and that meeting?
Yeah, so a lot to unpack from this meeting. Of course, the biggest headline is the progress that the two sides have made on trade. As you just saw in that clip, sort of the ground is being paved for a trade agreement between the two nations. The two sides have committed to $500 billion in total trade by 2030. That would mark about a quadrupling of the current level. So this is definitely a sign of a deepening trade relationship. Of course, a large commitment to sell more American weapons to India as well. Now, there is a wrinkle here, of course, which is that Trump's announcement of reciprocal tariffs on its trading partners is set to hit India quite hard. India has some of the highest tariffs in the world. These hit American goods particularly hard, and Trump has complained about this point in particular when it comes to the trade relationship with India. So this is something that India is going to have to address and deal with in the future negotiations in the future months and years ahead.
Dan, a key question is whether Modi was able to negotiate from a position of strength. I mean, they had good relations before, but relations are different now.
Yeah, that's right. I mean, the two sides do have warm ties going back to the first Trump administration. Across Democratic and Republican administrations, India has been a growing partner of the U.S. I mean, to your question of whether India was able to negotiate from a position of strength, well, I think the actions here speak louder than words. I mean, in the weeks leading up to this summit, India has been gradually rolling back some of its own tariffs in expectation that the U.S. would come at India with some reciprocal tariffs. So I think there is a sense that New Delhi really had to give on some of the key points of the trading relationship if it wanted to get a good deal from the United States. And I think there is a sign that perhaps some of those early concessions by New Delhi to roll back tariffs on things like motorcycles, luxury cars, a whole array of goods, kind of hasn't been enough to placate the U.S. so far.
Dan, thank you so much for that. Bloomberg's Dan Struff in New Delhi. Let's get more insights from our guest. Swaran Singh is Professor for Diplomacy and Disarmament at Jawaharlal Nehru University, and he joins us from New Delhi. Professor, good to have you with us. We know that Modi is only the fourth foreign leader to meet Trump in D.C. I'm just wondering, this is not just symbolic, it is significant, isn't it?
Thank you, Linda, for having me on your program. I think the key lies in India being projected and being seen as a rapidly growing economy, expected to be $10 trillion plus economy by 2030. And that has many attractions for a country like United States. As far as tariffs issue is concerned, I think that also is understandable when a country shifts from being a low-income country to middle-income country to developing and then, of course, developed country. Those issues will crop up in India's relations with many other countries. So the India rapidly growing, in fact, fastest growing economy among major economies, is definitely going to have enormous increase in consumption of energy, which is one area where I think a lot of complementarity was utilized. And of course, it will also require enormous investments in India's defense sector, military modernization, which is another area where a lot of complementarity was very useful in setting the stage and, of course, clinching several mutual understandings on various issues. So the two clear clinchers from this meeting, I think, to me, are one, that they agreed to have another, they had in 2005 a framework for mutual defense cooperation, which moved in 2015 to India becoming major defense partner. Then that framework continued for 10 years. And now again, they've decided to create another 10 years of framework for mutual defense cooperation, India as a major defense partner. Similarly, on the trade deal as well, they have already given a date of this fall this year, that the first tranche of their trade deal is going to be signed. That was something that was also attempted during the first term. So there is a lot of complementarity, which I think made it possible that they could sort of deal with some of the irritants that were appearing in the relationship.
But isn't it true that those trade issues continue to cause friction in bilateral relations already? We've had Trump call India a tariff king, that a big abuser. He's not happy with a surplus. Yet when you take a look at the surplus and put it in perspective, it is smaller than other countries like Mexico.
See, that has been a very clear concern of President Trump, his sense that rest of the world is trying to take advantage of the United States, and that tariffs needs to be raised in terms of making American exports competitive. We saw that during the first term. We are seeing that again now. And as you mentioned, India is not one of the largest in terms of trade deficit. China is about 300 billion. Then, of course, comes Mexico, Canada, European nations. But of course, yes, in a small, relative small trade of $120 billion or so, a 45 billion deficit is a matter of concern for him. And that is where, as your report mentioned, India has already made certain symbolic gestures during this year's budget. And I'm sure a better understanding has evolved in this meeting as well. So a lot of this thing is also going to be tackled as they talk now of taking their trade to $500 billion by 2030. By when I just mentioned that Indian economy is projected to cross $10 trillion and so on, and which makes that kind of trade target possible. So I'm assuming that a lot of things and irritants are not something that can completely disappear in any relationship, particularly when relationship is transforming so rapidly as it is between India and United States. But the warmth and bonhomie, I think, was very clearly the body language there, and they have shown us that the US is endorsing the India, Middle East, Europe economic corridor also now, taking it to Israel and Italy. So there is a lot of endorsement and complementarity. Both sides had something to take away. So I wouldn't put it in terms of who is the winner in the meeting. I think both have to be winners. Only then the cooperation survives.
We heard from Modi even before he made the visit. He was willing to make concessions to buy more defense equipment from the U.S. But we know India has its own ambition to grow its defense sector in the country. How will this play out? Will it impinge on India's own ambition?
I think that's another very interesting complementarity here. Because India definitely, in India, we talk all the time need for modernizing India's defense equipment, which is lagging for several years and decades in some cases. So we already had the important defense relationship with Israel, with France and so on. But look at the fact that India is world's largest importer of defense equipment. United States is largest exporter of defense equipment. But still, it is Russia that remains India's largest partner. It is Israel very often, which supplies more than United States. France supplies more than United States very often. So it is just, putting the course correct. It's course correction in that sense that an increased relationship will happen in terms of defense cooperation with United States. But difference is that India's procurements are not simply going to be getting the gadgets home. Now India is talking in terms of jointmanship in innovation, in research, in development. And that should also make American exports manufactured in India much more competitive in many ways. Because India's unique selling point when it comes to modern technology is simply that we can provide things at much low cost. So when US wants to become competitive in terms of its production, including defense production, I think that kind of partnership in joint development, and a lot of that is already happening. All the foundational agreements that India signed with the United States happened during President Donald Trump's first term. So defense cooperation, I think, is definitely going to move forward. US also sees India as a very important operations and logistics partner in terms of Indo-Pacific, which is also something that President Trump really is very, very conscious of. So I think it's going to be a very different kind of evolution of defense cooperation, where other than getting access to the most modern defense technologies, F-35, for example, focus will also be possibilities of joint production in India, joint development, joint innovation, and so on. And I think that is where the two leaders have done broad understanding on issues. And I think some of these will be put into practice and specific agreements in coming weeks and days. On some of them, they have given deadlines, and some of them may take longer.
So, Professor, there are prospects for India and the US to work together in the area of defense. I'm just wondering, we heard Trump saying that he not only wants to work closer with India, he also wants India, China, Russia, and the US to work closely together. What really are the prospects of that happening?
I think that is unique and new, if that can happen, because over decades we have seen China and Russia really over time coming together, building no limits partnership, and that was seen as a counter to United States. And if President Trump is willing to reach out, and he has already spoken to President Putin, as he said, and he's spoken to President Xi Jinping as well, I think it goes in favor of India in that sense, because if let's say that kind of bonhomie between US and Russia is somehow managed and balanced, then that empowerment of China
Right.
with Russia being a close partner and India having to face that increasingly assertive China would have much more kind of a multilateral arrangement of four leaders talking to each other, dealing with issues where they can complement, and that will also reduce pressures on India in terms of its friendship and procurements from Russia.
Right.
Because if President Trump is talking directly to Putin, obviously I don't think there'll be pressure on India not to talk to President Putin.
Professor, of course, Modi's visit to D.C. comes against the backdrop of that overhang of Adani in the U.S. Take a listen to what he had to say when asked about it.
Every Indian is my own family member. And when it comes to such personal matters, leaders of two countries will not get together on that topic and discuss anything on an individual matter.
Professor, what do you make of Modi's response to the question? And do you see Adani as being a leverage for the U.S. to use on India?
I think, first of all, Prime Minister answered himself, and this is very usual that in any such meetings of two national leaders, when they have a huge, widespread issues on the table in agenda, I don't think they are talking of brass tacks and nitty-gritties of how each T will be dotted and I will be dotted and so on. They focus on larger understandings in principle, in strategic terms, as to where they want to take the relationship forward, broadly where each side will make concessions and so on. And that is where I think one has to understand that
यहाँ पर देख करके और आपको यहाँ पर मिल करके
I think we've just lost Professor Singh there, Swaran Singh from Jawaharlal Nehru University. Great perspective from the professor nonetheless. Now still to come, Stanton Chase's Charu Alkaya joins us to discuss global hiring trends and the impact of AI on the workforce. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. JPMorgan CEO Jamie Dimon says he will scale back spending on some diversity initiatives that he sees as a waste of money. In a recording of a town hall heard by Bloomberg, Dimon said plans to cancel some initiatives were about costs that went too far rather than blowback from the new Trump administration. Dimon also defended the bank's return to office mandate, citing reduced efficiency in hybrid work settings. Now, many big U.S. companies have already scaled back DEI efforts in recent months, with some pointing to a changing legal landscape as the reason for that. Let's bring in our guest. Charu Alkaya is Managing Partner and Global Chair at Stanton Chase, a global executive search and leadership advisory firm with offices in 45 countries. Charu, good to have you with us. So Jamie Dimon says no thank you to DEI now. I mean, he's not alone. What are you making of it? What are you hearing from the leaders out there?
I think people are confused, and it's very normal that they're confused. I think we're confusing two things here. We're confusing about D&I being a buzzword and being a hype for a period of time. But it was never the reason for us to be focused on D&I in the first place. We are always cautious to stay at a distance to any buzzwords or hype concepts. However, we were early adopters of D&I, and it was because we discovered together with our clients that it actually helps them. So I think when people are making such popular sounding comments, they're missing the fact of how the focus on D&I started. The focus on D&I started because companies started to understand that they lost touch with their markets and their consumers and their communities. A group of very well-educated Ivy League MBAs running companies started to feel like they don't understand their customers and consumers anymore.
Right.
And then they wanted to bring on a diverse group of people in terms of not only gender, sex, race, but also diversity of opinions, diversity of experience, diversity of thought. So I think it's
whether or not there's a misunderstanding when it comes to DI concepts and whether it's needed or not, the fact of the matter is that more and more companies are pushing back on D&I matters and D&I costs and D&I policies. How does it shape the leadership hiring? What are you seeing?
In terms of leadership hiring, we are not seeing a major change, at least not yet. Again, when we talk to our clients and when we take on a mandate, there's one specific thing we're focusing on, what the business needs and how the process we're going to lead in bringing in a new executive to a company will help that company achieve its objectives. Diversity, in that sense, is just one of the elements, and sometimes it's a significant part of one of the methods to achieve those business objectives. So, in a sense, the principal rule haven't changed when we started emphasizing the E&I more, and it's not changing now either.
Even as we talk about hiring, we're actually in an environment where there's a lot of firing. Within the last 24 hours, we've had the likes of Commerzbank, HSBC, Blue Origin talk about, plans to fire their workers. I mean, is the world currently looking at potential firing spree?
Again, a very hard question to answer. We have to wait and see. I don't think this is going to last, or it's going to be a common trend. I think I would call this shuffling and reallocation of resources in terms of both financial resources and human capital resources. It's very obvious that globally we have a huge reskilling challenge ahead of us. So does companies. However, the fact that executive talent shortage is still present is still a fact, and
right.
The type of executive talent that is required at the moment doesn't match the demand. So executive talent with the qualifications that are required to navigate the challenges of the current world and the current dynamics is still,
right.
Yes.
Let's talk about that executive search. We know that the industry has, evolved dramatically. Have profiles also evolved? Are the requirements different right now when it comes to, executives?
It has. I think this was a gradual change, which became quite more obvious in the past few years. And believe it or not, diversity has as a role at play here, because in terms of both executive search firms and how companies form their C-suites, there was it was very homogeneous, to be honest. So when we look at talent today and the role of executive search and executive hiring, we're not looking for a typical executive who is the best option for all cases. We are looking for a diversity of experience, skills, and thought processes and approaches. We're not looking for people who have straight career progress. We are looking for people who have experience in different industries, in different functions, who had made moves sideways, and increased the breadth and depth of their experience and skills.
In terms of opportunities, which sectors are offering the most money? Which are the best paying sectors out there?
Well, technology for sure. And anything technology is one of the best paying sectors. There's a strong demand in energy and natural resources as well. Apart from that, I'd say it's not possible as in the past to say okay, now the trend is financial services is best paying. Now the trend is it's consulting, management consulting who's paying best. Now the trend it's life sciences paying the best. I think the business world has democratized in that sense. It's the quality of the talent that determines the pay rather than the industry dynamics.
Jara, thank you so much for that. You got to wonder as well with the AI, picking up pace, whether a CEO will be replaced by a robot next time. Jara, thank you so much for that. Managing Director and Global Chair at Stanton Chase. Well, coming up later on Bloomberg TV, an exclusive with Starbucks CEO Brian Niccol. Don't miss that interview at 12:30 p.m. Hong Kong time. That's 8:30 a.m. if you're sitting in Dubai. And before we go, here's a look at some of the guests joining us next week. On Monday, Hindalco Industries MD Satish Pai will be joining us to discuss the impact of Trump's metals tariffs. We're headed to Aviation Festival Asia here in the Lion City for interviews with the CEOs of Cebu Pacific as well as SpiceJet. And we'll also be at Crypto Conference Consensus Hong Kong with OKX President Hong Feng. And a quick look at how futures in the US are trending at this point in time. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.